Hey guys, welcome. It's Alex Burns here with Remax Alliance and VictoriaHomes.com. I'm here with a good buddy of mine, Jason Chapman with Mortgage Architects. How you doing today, Jason?
Awesome. How you doing?
Good. A little bit, busy morning today, trying to get the kids to school, trying to pack lunches, you know?
Yep. Well, at least you weren't trying to book a room at the last second for this.
That's true. That's true. We got kicked out by the banks. They said, we don't want you guys to tell all our secrets. So Jason's here going to talk a little bit about the mortgage rule changes here coming up December 31st at 12 midnight. I guess the changes are taking place, eh?
Yep, exactly.
Okay. So tell me and the audience a little bit about what we can expect coming in January. Are we going to see some massive changes with first-time buyers, or who's this really going to impact?
Well, this is a big impact for anybody who has 20% equity in their home and has a mortgage, or is looking at purchasing a home with 20% down or more. This is the biggest problem. This is the biggest rule change in Canadian history, and the reason why is because 4 out of 5 people in Canada have 20% equity in their home or more, or buy a house with 20% equity or 20% down. So this is massive. This is going to affect basically 80% of homeowners, or 80% of people that have a mortgage.
Wow. Okay, so let's run through a few scenarios. We don't have a ton of time on camera. I'm probably going to lose lots of audience here. So I'm a buyer. I just got 20% from my parents. We hear about that all the time in the market. Lovely to see parents helping out their kids get in the market. So I'm looking at buying a condo. I'm a single guy. I've got no kids, no responsibility. Hi, Lara. So let's go through a little bit of how that's going to impact. So right now, let's say I'm qualified for 400 grand. I've got 20% down. What am I going to look like in the next couple months?
All right. So you buy a condo, say for $400,000 down. You're going to put down 20%.
Yep.
All right. So how it's going to affect you is today. That mortgage payment would be today. We would qualify you on a mortgage payment based on the rate you're going to get. So maybe around 3% or just over 3%, something like that.
Yep.
What happens if once January 1st comes along, you'll have to qualify as if your mortgage payment was the greater of currently 4.99, which is the Bank of Canada benchmark rate, or 2% above the actual rate you get. So in this case, if your rate that you were to get on a mortgage is 309, you'd be qualified at 509, the greater of the two. So that means your mortgage payment associated with it to qualify would be greater.
But I'm still going to get the 2.99 rate. It's just I have to go up to this level to see if I can manage that rate. And if I can manage that, the bank's like, okay, and the government's like, okay, we're comfortable lending you the money, because if the rates do go up one day, then perhaps I won't be sinking.
Exactly. Yeah, that's the main point of it. OSFI, who regulates the financial institutions in Canada, the chartered banks and so on, they're the ones implementing this rule, and this is to protect the banks, to make sure that they don't get into trouble when rates do eventually rise.
It's amazing. So, banks don't ever seem to lose, do they?
Well, yeah. I mean, they're arguably the banks may not be super in favor of this either, but because it's potential customers that they're going to be losing. But
okay,
gotta be safe.
So getting back to the 400 grand. I'm hearing in the market that it's essentially going to decrease my mortgage borrowing power by 20%. So if I'm qualified up to 400 grand purchase price, I've got 20% down, which is 80,000 off that. So I have a $320,000 mortgage. Is it fair to say that I can subtract 20% off that 320?
Yep, exactly.
Okay.
Well, I mean, you have to keep it in the context of that's your maximum.
Yeah.
You know, if you were to tell me you make $1 million a year, it doesn't affect you probably at all. But for people who are, a first-time home buyer or a new person coming to the market, or somebody who is just qualifying for that mortgage, they're going to be impacted. So if you're out there and you're shopping or you're thinking of refinancing your home, I would give some strong consideration to making sure that these rule changes won't affect you, that you can go out and comfortably put offers in case you don't get a place before the end of the year. Because it could affect what you're out shopping right now.
Mm-hmm. And so 9 times out of 10, do you think that people borrow as much as they possibly can? Especially in the Victoria market, it's kind of hard to get in.
Yeah, I'd say certainly for younger people, they're quite, almost always stretched. For more mature borrowers that are more established, it's a little different because they've probably had a mortgage for a number of years, and their mortgage, isn't necessarily right up at the top, and their incomes are usually higher.
Yeah.
So a little bit
Okay.
less there.
Okay. Jason's a mortgage broker. He has access to 40 different lenders. We're going to talk a little bit about how he could still help you get in the market with some older strategies and with some strategies from other lenders that are willing to still stick with the older rules. We'll talk about that in a second. But I wanted to maybe ask you a question. What are you hearing in the market? What are the questions that the average buyers are coming to you with this new change? What's kind of important that you want to tell the viewers today that you're hearing?
Well, it's actually a lot of the questions that people aren't asking, or they're not realizing the effect. I mean, we're sitting here talking about how this is going to affect buyers, and it's clear. I hope we made it clear how it's going to affect. But if you already own a home and you want to refinance, it's going to affect you in two significant ways. One is that if you want to refinance, like I said, you're going to have to qualify at the stress test, which means if you refinance your mortgage in the new year, you're going to get less equity out of your house.
Yeah.
If you the other important thing is, if with these new rules, if you change lenders, so if your mortgage comes up for renewal,
Yeah.
and you want to just change to another lender for a better rate, you have to then stress test before you can move to that
Wow.
lender.
Wow.
But if you stay with your lender, you don't. So this could affect what the rate you're going to be offered, because if you don't pass a stress test, your current lender kind of has you for a little bit.
So the good old days of shopping around on the renewals are going to be more difficult.
Exactly.
Wow,
yeah.
that's
Yeah.
big. That's
Yeah.
big. That affects every single person. It doesn't matter if you're a first-time buyer or you're young. If you've had a house for 20 years and you've, still have a mortgage on it, this is going to impact you significantly. Okay. So Jason, tell us a little bit about, unless you have something else
Yeah.
you want to add to that.
So more to that, this is the rules, as you know, are only affecting lenders that are governed by OSFI. Credit unions in British Columbia, for example, they're not going to be affected by these changes. The FICOM, Financial Institution Commission of British Columbia, has already made a statement saying that they are not going to follow these guidelines.
Wow.
Or implement them onto the credit unions. So credit unions won't be affected. So there'll still be options out there for borrowers, and there are also other alternative options. There are other lenders that I have access to that I can, that aren't going to be affected by these rules. So there'll still be options for people, but it gets a bit more complicated, because then we talk about, well, will the rate be as good? Will the product be as good? We don't know how it's going to all shake out. But
Yeah. Wow. Okay.
Yeah.
I know my experience dealing with people is they're always wanting the best rate, and I think now more so than ever, you want to go with not only the best rate but the best company now, because if you're going to get stuck for 25 years with an institution, and the renewals may not be as strong as when they first got you into the mortgage product, you're going to want to go with something safe.
That's a huge point, actually, Alex, because you're right. There are, when it comes to renewals, like when you come up for your mortgage coming up for maturity, different lenders treat the rate different. So
They suck you in with the good rate, and then all of a sudden, hey guys, 5 years later, surprise, we're a quarter or 0.5% higher than everybody else.
That's right. And some lenders
Crazy.
will always renew you at their best rate. So there's no negotiating. So that's going to be a really critical factor going forward. Definitely, the advice that like a mortgage broker can give is gonna really start paying big dividends.
Okay,
Yeah.
so we're gonna wrap this up. Is there anything else you wanted to add before I kind of bring it home? Because we're about to, I think, lose everybody here in the viewer land,
Yep.
because we got a 2-minute attention span, I think, in the world.
Nope, that's good. I think I covered everything.
All right, Jason.
There's
So
a lot more. Yeah, sorry.
thank you for the opportunity. And Jason works for Mortgage Architects. As you can see, he's actually into building the right type of mortgage product for your needs. I would highly recommend you giving Jason a call. If you have any questions, I don't know if we're getting any questions right now, but if you have anything that's personal, you can always leave a private message below, or you can actually just give Alex or Jason a phone call. My direct number is 250-882-3335, and yours is?
And you can reach me at 250-884-0999.
Fantastic, Jason. Thanks
Thanks.
for your time today. Thanks for the camera crew for getting here quick out in the West Shore. We're super excited, guys, that you tuned in today, and let us know if you have any other suggestions. Maybe Jason and I can do this more often. We feel like video is a great way to have a meeting with you, but not actually have a meeting with you, because you guys are super busy. We totally get it, but obviously want to bring you the right information in the market when we see it's a necessity to get it into your hands, because right now we've got probably a month that we can get the old mortgage rules in place. So even if you close a house transaction on December 31st with the traditional banks, we could still use those old rules. It doesn't mean your transaction has to close before December 31st. It just means it has to go unconditional. So just something to think about there. And you're going to say something I don't want to...
No, I don't know.
Okay, cool.
You
Awesome.
Hang on.
Hey, we got a bit of a sun break today. Pretty exciting. Let's try to enjoy the sun while it lasts and have yourselves an awesome day. Appreciate coming by.
Thank you.